Hello traders, today again we want to analyze a chart in a fractal way. This is a price action trading and we just want to look at the chart based on the fractal. So what is a fractal, you might ask? Look at this. This is the definition of the fractal, a curve or geometrical figure, each part of which has the same statistical character as the whole. They are useful in modeling structures and this is the part that we need, in which similar patterns recur at progressively smaller scales. That's the part that we need and we want to focus on in trading. So it's gonna recur, doesn't matter how many time frames you go up or you go down, you're gonna see the same things happening. So what we want to look at is the highs and lows, and then from them we're gonna focus on drawing support and resistance lines and trend lines. That's all we need. We don't look at the single candles, we don't look at the candlestick patterns, we don't zoom in to see single candles there. This is a doji, this is a inside bar. We don't look at any of that. We look at the chart and the price movement as a river flowing through the base of the river and then going up and down based on what's going on underneath the price. So we start from a higher time frame, we draw our lines, we determine the highs and lows, and then we go through the time frames one by one in the lower time frames to find the best entry point, and then we take a trade there. So if there is a high probability chance, we're talking about the 90-95% win ratio, not 55 or 60 or 65. We don't aim less than 90%. So we need to pinpoint the entry point. So now, this is the Euro USD 1 hour chart. What we see is the flow of the price going up and down here. And as you can see, it makes highs and lows. It stops in some places. Like, see, we have a high here, another high there, and a high there. This is kind of like a sideways market. And then from this last high, the price starts to moving down and breaking the bottom here. So this support line here is broken. The price moves back to it and then falls down and starting to go down. So this is a place that we want to see the new. Let me grab my pen to show you properly what we're going on. See the flow of the chart. This is like a river, right? Highs and lows, up and down. This is what you have to look at. This is the flow of the chart. Now, you have to see this is the place that I said we have this sideways market. And at this point, the price breaks the bottom and then goes down, comes back up, and it starts to falling down. What we want to do is draw this trend line here, and then we decide about this support and resistance line. That's all we want to do. So let's do it in this way. I'm gonna use this indicator to draw some lines. So the first thing that we want to do, we want to determine the beginning of a trend, which was here. Okay, up to here, up to this high, market was in a sideways. But from here, the market started to move down, and then it breaks the support line at the bottom. So that's what we want to do. We start from that line. So we start to draw some resistance to connecting highs and lows. Sorry. That's what you should do. And the highs and lows that you connect is based on your view. Some people have a very detailed view, so they see too many highs and lows. Some people just have a general view. They just connect the main highs and main lows. This is up to you. So your view of the chart will determine the highs and lows, and at the end it's gonna determine the trend and the trend lines and the breaking up the trend lines. So two people two traders can look at the same chart and see different things. None of them are wrong. It's just that some of them, one person like has a detailed view, the other person has a general view. It's not wrong. So it's based on your view. Then we're gonna connect these highs and lows. Let me grab. And then connect them with the trend lines. So the first trend line goes there. I connect these two highs. The second one we start from the top again. If we make it like a normalize it, it's gonna be like that. And that's all we need. Maybe you can draw another one there, but that doesn't help much. Maybe you put another one there, but it's the same thing, not much different. So the next thing is support and resistance line. For now, we just focus on the horizontal ones. That's one. We have one like here. The one at the bottom is down here. And then probably you can do one there, maybe one. At first it's going to be too many lines on the chart, but at the end when you want to take a trade, you don't need most of these lines. You just have to have a couple of trend lines and a couple of support and resistance lines. Now this is a 1 hour chart. We're not going to take a trade in a 1 hour chart. Maybe you can, but I'm not. I'll go down in the lower time frames. So how much, you might ask, how much time frames you have to go down? Technically it should be 12 to 20 times less than your main time frame. If your 1 hour chart is your main time frame, your high time frame, your lower time frame is going to be like divided by 12 or 15 or something. It's going to be like a 5-minute chart. If it's 15 minutes, that's like a 1/4. It's not good. If it's 1 minute, that's 1/60th. That's too much. So probably 4-minute, 5-minute, 6-minute chart. It's like somewhere around there. So I have a 5-minute at the moment, so I'll focus on the 5-minute. But we go down from the 1 hour chart one by one. So at the 30-minute chart, technically you see the same thing with more details, so not much difference. The only thing, maybe I can add a single like a support line here. That's it. So this low here is a little bit close, or maybe you can, I can draw this box here as a kind of an area. Then you go lower, the 15-minute chart. Now here we start to see more trends, like a smaller trends in the higher time. Okay, back in the 1 hour chart, this last leg was a normal, like a one leg, one high, connecting low to high. But now we start to see, okay, this is another trend, kind of uptrend itself. So if we go to the 5-minute chart, this is where we're gonna take a trade, right? Now again, we see a trend. It started from the bottom here. They stuck a little bit under this support line here, and then it broke through, came back down, went up, see, came back down. See, it doesn't matter how many time frames you go down or you go up, you see the same thing, same patterns, up and down, breaking trend line, breaking support and resistance line, coming back to test it, and then going back up. That's what we want to see. That's how we take a trade in a higher time frame, taking it to the lower time frame, and then pinpoint, and then take a very nice trade, maybe 3 pips, 5 pips, 10 pips, based on your time frame. So this is a Euro USD 5-minute time frame. So from this high up to the highest high, 16 pips. Maybe you can take 10 pips out of it. Nice. Now it's going back down. As you can see, if I start analyzing the chart again, I have to start the beginning of a trend, which is down here. So I do the same thing, connecting highs and lows. Goes up. I put it here. See, there are too many highs and lows. I just take 2 of them and then connect them. That's it. That's how I look at the chart. Maybe you look differently. Do as much as like it pleases your eyes. That's how I can say it. You can see it goes up, Now it's going down. The last one I can't connect it because it's not finished yet. So what I see is that this area here, we have a kind of a support area, and still we have a gap there. Probably it's gonna be filled, maybe not, maybe just because that orange line here is from a higher time frame, from 30-minute time frame. So probably it's gonna hold. It's a major high up there. So this area is a major high. Maybe it comes down and then goes up, maybe it just jumps up from here. So let's see what happens. But what we're gonna do, we're gonna start to draw some support and resistance line in this time frame, the 5-minute time frame. I take a different color. All these highs, if I connect them, now the price is at the top. If I want to take a trade, I can take a trade here. Let's see if I can. Okay, I took a trade. Now you might ask, where is your stop loss? If you're calculating, my stop loss is gonna be under this low here. So before you take a trade, you have to calculate your stop loss and then determine your lot size, okay? Do not take a trade and then determine the stop loss. No, I took a lowest lottage that I could. It's like a 1 micro lot, just to show you where to take the trade. But you have to determine your lot size before you take the trade, based on the stop loss that you're gonna take. So this is gonna be my stop loss under here, a little bit lower because of the spread. That's my stop loss. My TP, my target. Let me grab this. Is the high, a little bit lower, about the spread. So it's gonna be like a 9 pips, 9.5 pips. So you might ask, okay, this is not even 1-to-1, ratio. That's all right. We have a higher probability of the trade taking place and hitting our target because the price has broken all these support and resistance lines, all these trend lines, and the trend has changed from the low, the downtrend into a midterm and into a kind of a sideways trade, and then it's going up. So we have a very high chance that this price is gonna hit the target. And as you can see, as soon as we took the trade, let's zoom in a little bit, change it to candlestick. As soon as we took the trade, the price starts moving up because we entered at the best position. Maybe the price drops, breaks this line, goes back down and hits our stop loss. No one knows, okay? We're not fortune tellers. We just react to what market shows us. Whatever market gives us, we analyze it and we just do something about it. Either you take a trade, either you stay away or do something, right? But you cannot determine the price is gonna go down or not. We just stack these high probability on top of each other. There's a one trend line, there's a one resistance line, there's one this pattern, that pattern. Okay, we just stack them on top of each other to make the probability of the trade going in our way to the highest point. So from now on, what should you do? We just wait. Wait probably is the best tool in your toolbox. You have to wait. A trader who's not patient, not gonna win in the market. You have to wait to find the best point of entry. You have to wait until your trade, after you take it, it works out, You have to wait to see the best possible action, the best possible moment to do something. Wait is the best tool in your toolbox. Remember that. A trader who is not patient, not gonna win in the market. So I'm gonna wait and I'm gonna stop this recording, and we're gonna come back in the next 10, 15, 20 minutes, see what happens to this trade. Okay guys, look what happened. The price moved back down here. We took a trade around this area and then price jumped up. How much? You can get your Fibonacci retracement. I changed the numbers to 50%, 100%, something like that, right? So when the price moves 1.5 times of this pullback, it normally stops. So you see at 50% higher than this high, the price stopped. So let me put it on the bar chart, and then let's look at our trade. We took a trade down here, and then we stopped it before it hits the high. That's like a 95%, probably even 99% accuracy. Price always goes back up to the high. Sometimes it hits the high, sometimes even like now goes up to 50%, sometimes even go to higher areas like 100%. But this is a safe area. If you put your target below this high, like twice the spread lower, or this is a 5-minute chart, so you can do that. But if it's in a 1-minute chart, probably you don't have enough pips to do that. This is Euro USD. We have 1 pip spread normally in the different. Some even you have 0 spreads. But if you put your target a little bit lower than the high, the probability of the price hitting that target is much higher. So you enter at the low, you put your stop loss, you put your target at a little bit lower than high, and you put your stop loss at the previous low, wherever it is, plus the spread. If you remember, I put my stop loss a little bit lower than this low here. So I had let's see, I had like 10 pips target, and I had like 11.5 pips of like a stop loss. So it was less than 1-to-1 ratio, but still it hit the target. Very good, and it's gonna retrace back. Again, as you can see, it retraces back to this high. You can take probably another trade here, but you have to check the higher time frames, how the price is reacting. As you can see, price is almost close to this resistance line on a higher time frame. So this is a strong area. Is it gonna go back up to here? Maybe, I don't know. But the first time that it breaks through a resistance line and it pulls back in this area, that's a very good area to take the first trade. The second one or the third one, the probability of the price doing the same thing, it just decreases. That's what you should do. As you can see, you don't need any indicators. If you know the price action very well, indicators are just an add-on, just like a bonus. Don't base your trades on the indicators. You must know the foundation. The foundation is price action. If you know the price action, you can use any indicator. I'm not joking. You can use any indicator, and that indicator will give you very good signals. Don't you think if I put okay, let's put some stochastics here. So oscillators, stochastic. This is a default stochastic, 533, right? You see in this area, the stochastic is down here. We have a hidden divergence. We have a cross under 20, and when the price hit the target, the stochastic at the top. See, everything works out. Now, let me put the MACD, for example. This is the MACD. This is default MACD, 12, 26, 9. Again, let me put a line here so we know where it takes the trade. As you can see, MACD is low. It's going up. It's at the top of this. You see, if you draw a support line at the previous high of the MACD, the next high comes back down and it's gonna go up. Same thing. When this low is happening, the MACD is same at the low. You see, you don't need any indicators. You can use them as a kind of a backup, as a kind of a bonus, as a kind of a confirmation. Good. But if you know the price action, any indicator you use gonna work out. Done. So I hope you enjoyed this analysis. I hope you enjoyed this trade, and I wish, and I probably can see some of you will go back to your trading system, trading analysis, and check the trades that you've taken so far, and do this kind of price action analysis, and check if you have entered at the market at the very good price action position or not. If not, start analyzing the chart maybe 1 week, 2 weeks, 3 weeks, 1 month back, and every time find the best spot for entry, and then look at your indicators to see if they have a good signal or not. And I promise you, if you find the best price, best point on the price action analysis, your indicator will give you a good signal at that point too. Alright guys, this is for today, and follow up and subscribe to my channel if you like my trading analysis, if you like these kind of videos, and hit the bell button, so we're gonna be a very good community in the future. I hope you enjoyed this analysis, and I hope you enjoy your time. Have a good time. Bye.